Hello, we are on the move. This is Christy Schaefer with the Schaefer Home Team, and I am joined with my guest, Nick Macarone from Oxford Mortgage. Hey, Nick.
Hey, how are you doing this morning?
Good. How are you?
Yeah, I'm doing wonderful. Thanks for having me.
Good. Well, today we're going to talk about down payments on a home loan. And I often will get people who come to me and say, I can't buy right now because I don't have 20% down
Right,
on to put down on house. So what
right.
do you say to somebody like that?
Well, I mean, first of all, that is a very common misconception, right? I mean, if you just watch the news, if you've never bought a house before, if you're talking to your parents a lot of times,
Yeah.
that 20% thing gets kind of stuck in people's brains. So on a conventional loan, for example, you only need a minimum of 3%. There are 3% down options right now.
Good to know.
Now, we typically on conventional loans will recommend it because it's got better mortgage insurance and slightly better rates and things like that. But there are options with 3% down. So that idea that you need 20% is just not true, because I think we all know that in a place like Colorado, especially for first-time home buyers,
Right.
20% is a gigantic number,
Oh, I know.
right?
Absolutely.
That is unattainable for most. So
Now,
there are some, great options for that.
are there some benefits though to doing 20% as
Yeah.
opposed to doing 5 or 10%?
Oh, of course. Listen, well, one obvious one, right? Obviously, if you finance less, you pay less.
Right.
That's the easy one, right? But the other big one is that if you put down 20%, you do not have mortgage insurance.
Okay.
Okay. So mortgage insurance is just a insurance policy taken out on your behalf by the lender to protect them from default, right?
Okay.
The less you put down, the higher the factor for that insurance amount is. All right. So the more you put down, the less the factor, the lower the loan amount is that factor is calculating against. So yes, you'd have a lower mortgage insurance amount the more you put down. And then if you put down 20%, you don't have any.
And so if you put down 10% as opposed to putting down 3, you still have mortgage insurance, but it's a smaller amount. Is that what I'm understanding?
Yeah, that's exactly right. That as you put more down, getting closer to 20%, that factor becomes lower, 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 and lower. Okay.
And
The other
eventually,
thing on a conventional loan, I'm sorry, on a conventional loan is mortgage insurance will go away when you hit 22% equity.
oh, good. Okay.
Based on your amortization schedule. Okay, so when you close, you'll get an amortization schedule that says, I'm just making up dates here, but on your March payment in 2033, mortgage insurance is gone. Okay. But that's based off just regular payments. So if you look at the amortization schedule and you just look at when my loan balance is X, my mortgage insurance goes away. You make extra payments or whatever. When it hits that amount, it will disappear on its own.
Nice. So I also have some people that will come to me and say, hey, I haven't really saved up hardly anything. And are there, can I still buy a house? Are there down payment assistance programs? And, what do I do?
Yeah, sure. I mean, there are different grants and things like that are out there. The primary one that most people that have looked into it have heard of is CHFA, right? CHFA, that's Colorado Housing and Finance Authority. And that is just a grant for your down payment. Okay. So 2 things with this. The rate is higher than market.
Okay.
And the fees are higher in most cases than if you were to not use a CHFA deal. So even though it is considerably less that you're bringing to closing, because you're not bringing 3%, 3.5%, 5%, whatever, typically, unless the seller is going to pay your closing costs for you, you negotiate that in the contract, which is difficult right now, you will be bringing your own closing costs.
Okay.
So even though CHFA only requires $1,000 of your own money in the deal, it does not mean that you're only bringing 1,000. It just means that you have to bring at least 1,000.
Okay. Well, that's good to
But
know.
yes, there are some programs out there. We will, of course, explore those options with anybody who thinks they may need them. But we also will make sure that they can't do a regular down payment, like their own 3% or own 3.5%, because in the long run, usually bringing your own down payment works better.
Okay. So you had made mention about closing cost, and I have found sometimes with buyers, they're a little confused because they think that their down payment is everything they're bringing to closing, but there's
Yeah.
also closing cost that they're,
Right.
what is that? Do you have an average? Do you have a way that
Yeah.
somebody can?
You know, I think obviously it's different for every property. I mean, because there's a big part of closing costs is escrows, paying
Right.
your insurance company up front 12 months, things like that. So
Okay.
depending on what you take for insurance, how much the tax is on the property, but you know, kind of in your middle of the range, like 450 type purchase prices,
Right.
you know, I think a $5,000 to $6,000 is a pretty safe number.
Okay.
Again, that includes title, 12 months of insurance to your insurance company. So if your insurance is $200 a month, that's $2,400 of it right there.
Right.
Appraisals, underwriting fees, county recording fees, all that stuff. But I think, you know, typically if we're just kind of spitballing with somebody before we have real
Yeah.
numbers, you know, we always tell people, you know, plan on 5,500 to 6,000. It'll probably be less than that, but let's plan on that.
Better to be surprised with more money
That's
in
right.
your pocket than the other.
Exactly. Yep. Yep.
Wonderful. Oh, that's great.
Yeah.
Thank you so much. I appreciate you sharing about some of the down payment options.
Yeah. It's my pleasure. Thanks for having me on. And if you need anything else or any of your clients have any questions, please have them call me. Happy to answer anything they can think of.
Sounds great. Thank you so much.
All right.
Appreciate it. All
Thanks,
right.
Christy. I'll talk to you later.
Okay.